All right, what's happening, everybody? Winston here with MoveUp, and we've got some guests on today, and we're talking about insurance here in the moving industry and how to get your most competitive rate and just all the stuff that I hate trying to think about. These guys are really good with. I'm joined by Lou and Matt over at Alliant Insurance. So, guys, go ahead, start running with this thing. Introduce yourselves and tell everybody who you are.
Thanks, Winston. Lou Hefter,
Matt Bechtold.
So we run the moving and storage practice at Alliant Insurance. We've been doing this a long time, and we insure moving companies all across the country, from small mom and pops all the way up to van lines. And the reason we wanted to do this with you today was the insurance market has really taken a change over the last couple of years, and we're trying to educate buyers as to how to better dress themselves for underwriters, how to better appear, and what underwriters are looking for to get you better renewals. Especially this renewal is going to be a tough one for everybody. You know what we've seen, and you know, Matt and I do this daily with new business. You know, driving hiring standards have really changed, pre-COVID and definitely since COVID. And a lot of drivers that are now entering the workforce have less qualified experience than what we've seen in the past. And the labor shortage is definitely real. And when you put less experienced drivers behind the wheel, obviously bad things tend to happen. So underwriters are really cautious of that. So we're recommending that these moving companies, anybody who's listening to this today, really take a look at your driver pool. Driver hiring practices are key. So if you do hire younger, inexperienced drivers, it's critical to go through driving school, driving program. MVRs are key. Looking at past history, drivers with accidents and tickets are going to cause underwriters to turn the other way. We've got some great programs that we can introduce moving companies to, as far as how to get their drivers trained properly. There's a program out there called Smith System Training. It's not cheap, but it's a really good tool. You have one driver get trained, and they become a train-the-trainer trainer. Like the double negative. Anyway, in addition to that, background checks. Background checks are huge, and we're seeing more and more scrutiny on background checks. A lot of smaller companies are not doing them, and underwriters who see a company that's not doing a background check, they're turning away from that one as well. So we're looking at drivers and helpers. Anybody going into a resident's home, we should have background checks.
Right.
What we see in nuclear verdicts, and that's a word that people might not be aware of. It used to be the old days of whatever your policy limits were, what plaintiff's counsel was going after. Now these numbers that juries are awarding are astronomical. If you Google jury verdicts of truck accidents, they're in the tens of millions of dollars. Yeah. And it's cost prohibitive to buy that much coverage. So you want to keep you in business. We want to keep your pricing as low as possible and get you the best coverage available. In order to do those things, it's just a few small steps. Driver qualification files being up to date, MVRs being run, background checks being run. Matt will talk a little about fleet maintenance, which is really key. You want to pivot onto what they're looking for when it comes to fleets.
So when you're talking about your fleet, they're not just looking to see, are you doing the things that you should be doing? They're really looking for, are you properly documenting these things? Not just, oh yeah, we send our trucks every few months to get looked at by a mechanic. They want to be able to see the history of that vehicle. And back to what Lou was saying, God forbid there was an accident, this is going to be crucial, because you can show, our vehicles are properly maintained. It's not a negligence issue. Here's the documentation, the miles it was serviced at. Here's the next appointment when it's going to be brought back in. So documentation really is key here. They don't just want to see you doing it. They want to see you actually practicing all of these methods. And on top of that, your daily vehicle inspection reports, your pre, your post trip, basically doing everything you can do and keeping a record of it to show our fleet's perfectly maintained. This isn't something we caused. It was an accident, which is what insurance is for.
Right.
And also, if it is maintained properly and you have it documented, claims can get subrogated. The brakes failed. You just had them, worked on 2 weeks ago. We can go after the shop that worked on the brakes. So it's important that when a claim happens, you document what happened, how it happened, and talk to your broker, talk to your insurance company, let them know it was just worked on. It was just repaired. So
yeah. So I'm hearing, maintenance like detailed maintenance records, pre-trip, post-trip. I'm hearing with staffing, gotta be doing background checks and NVR checks. There's a lot of people in this industry that don't do those things. They don't do any of that stuff. We talked about this the other day when we were on the phone or whatnot. It just blows my mind that people do that, but it's just kind of this industry. Some people come in and maybe they don't know, or maybe they do know they should be doing it. They just choose not to. I don't know.
There is definitely a training curve. There really
Yeah.
is. What's expected of a moving company is not always known by a moving company that starts up.
Right.
So it's key to work with, a broker or a consultant who understands the industry, can guide you into what's necessary. Another thing that we want to talk about before we run out of time here is training. Training is key. Maintenance training. When we talk about, a driver safety handbook, we talk to a lot of clients about their prospects. They don't know what a handbook should include. A cell phone policy. Things that, they say they do. We don't allow our drivers to use cell phones. Okay, do you have it documented? Going back to Matt's point. So putting together formal safety programs, having safety meetings on at least a quarterly basis. We recommend them monthly, but at least having them documented, have a topic, have a handout, have everybody who comes in sign and sign up. They were there. I know they're tough. I know that, we dispatch really early in the morning and it's hard to get them there a half an hour before, but if you do it once a month, have an incentive program, give these guys a reward for coming to the meeting and going, safe for a month, safe for 6 months, safe for a year. There's a lot to it that you can reduce cost by spending a little bit of time and a little bit of money up front.
When the big key word I heard there is documentation.
Always.
Because if you do it, that's great. But if you're broke, like if your insurance rep doesn't know that you're doing that stuff, they can't help you too much, I'm sure. And back to the point of incentivizing the guys, you can make it probably pretty simple and get everybody breakfast, and not just like a donut, but like do a good breakfast, make it fun, make it something at least semi-enjoyable, even though there could be a little bit of clunky stuff, I'm sure, with training.
Make them want to come in a half an hour early, one day a month. And there are tools. We have every tool available. We've got all the safety programs. We could build a year of safety meetings for anybody. We've got fleet safety policies. We've got the daily vehicle inspection reports. We have all of the tools for a moving and storage company. So if you're curious, if you have questions, we can help you.
Wow. So you guys really you're not just, hey, we're going to underwrite your policy. Like, hey, we got some systems and processes that'll get them in the right direction too.
We're consultants before brokers. So we do everything. We're very hands-on. We deal with the, underwriters, the claims people, loss prevention. It's a team effort. And we have a great staff behind us that allows us to be one-on-one with our clients whenever they need us. We're a team. You're always going to get one of us. We're usually always together. And we've got a great back office staff that, supports our clients really well.
Yeah. Now, this is what everybody's got to be thinking. Both of you guys are just jacked over here. So is this you almost look like father-son duo? Like, what's the, how do you guys know each other? How'd you get in this business?
I fell into the business family-wise about 21 years ago. Met Matt in the gym, 3 or 4 years ago?
I think it was 5 years ago. I was actually his personal trainer back in the day, and then just became friends. He saw, you could do insurance.
And he hits the cover off the ball, and he learned the business really fast. And I'm not talking just the insurance business. I'm talking the moving insurance business. Understanding the needs of a mover and the requirements of an insurance company insuring movers. And together we work again hand in hand. We've got a lot of business all over the country, and again, all we do is moving and storage. We don't dabble in it. We're experts and specialists in this field.
That's awesome. Yeah, and that's what, and you guys know, with MoveUp, we're the same way. It's like this is all we do. This is what we eat, sleep, and breathe is this moving industry, and it's a great industry. Like I love being in this industry. There's some really cool people and there's some really wild people. You gotta watch out, but it's the Wild West. But so let me ask this: if I'm gonna pose a scenario. So if let's say I have a 20 truck operation.
Sure.
Let's say that I do, I don't know, at 20 trucks, maybe I'm doing, I don't know, 4, 5, 6 million a year. Am I too small? Am I too big for you guys to help me? Like what kind of size companies can you help?
As we started out, we deal all the way from small mom and pops all the way to major van lines. So I would say the underwriting minimums to get with one of the prime insurance companies in the space is usually around 5 units, 5 revenue generating power units. They're not doing pickups, vans, and service vehicles, all the way up to thousands. We can handle anything in between, and it's economy to scale. It's for larger movers, we have programs like alternative risk programs. We're big into captive models, deductibles, and retentions.
Let's talk about do you mind if we talk about the captive model? Because I think there's a lot of folks that have heard about that and they don't really know a lot. So just maybe if pretend I was a newborn, to this industry, what is a captive program?
It's a 30,000-foot overview of a captive. A captive is really a financial mechanism behind the scenes of an insurance program. All your policies look and feel the same as they do now. Certificates are issued the same as they are now. There's nothing on the front end that would show you're in a captive. It's on the back end in the transaction financially. So you pay your premium like you do today, and a portion of your premium is set aside to pay your claims of your own premium. So claims that occur up to a certain threshold that's predetermined will come out of that loss fund to pay those claims. At the end of an underwriting year, if there's money left over, it's called an underwriting profit. You will share in the underwriting profit. On the other side, if you blow through your fund, you have potential to be assessed. So there's a bunch of different captive models out there. You'll find things that are A fund or A and B fund. We work in both models. Obviously the preference is just an A fund, but for the right size account, an A and a B fund. A B is a catastrophe fund. Okay. And again, staying at 30,000 feet and not to bore everybody off their chairs right now.
Sure, yeah.
If your losses are good, better, they have to be really good. You've got great financials and you're willing to bear risk. If you're willing to understand that you could get 30% back, or you could pay 15% more, that's the understanding. You have to know that your best and worst case scenario potential, which going in. When we do these, we actually provide what's called a net effective cost exhibit. Okay. So we take a 5-year look back of your actual premiums paid and your actual losses paid and incurred. And then we trend develop those losses, because again, a loss 5 years ago is not what it's worth today. Medical costs increase. We look at the cost of vehicles 5 years ago and where they are just this last year.
Yeah.
So we have to trend and develop claims. When we're done doing that, we bring back a presentation that shows you, had you been in a captive for the last 5 years, would you have had a return each year? Would you have lost money? And if you've been positive in 3 or 4 of those 5 years, you're a candidate. And I don't mean, you get $100 back, a significant amount. And then there's investment income as well. It really is a great tool for anybody paying, $200,000 and up for their auto and their work comp. And, that's probably the bare minimum for a group captive participant.
Okay. And this is like, I have Davis Moving and Storage, for example, pretend, and let's say I'm a 10 truck operation, and I could reach out to you guys. Maybe I already have something, but my renewal's coming up maybe in a few months, and I'm starting to think about this stuff. And a captive is where I'm going to be kind of in a pool with a bunch of other moving companies, and that's how the system really is able to sustain itself.
So you take yourselves out of traditional underwriting. So the traditional model of insurance, when you buy just a pure pure risk transfer where you pay a premium and you get a policy and you have a deductible, the
Yeah.
good subsidize the bad. So your premiums are going to be higher than they might be if there were no bad. So when you go into a captive, you take the bad out. So you're purely underwritten on yourself. So it's a tool it's for best in class operators. Again, 10 trucks is not too small because 10 trucks, the auto premium might not be there, but the comp premium might suffice that combined, you're a captive candidate. So
Right.
yeah, I would say anybody who's interested in looking at traditional alternative risk, anything in between, we're happy to look at both with them. We're happy to explain the differences, show them modeling. It's how we do it. We're not going to throw anything at you and say, this is what you have to have.
Sure.
We're going to educate you and make you aware so you choose the best program.
Right. Man, and this is, I think in the business, this is because there's kind of two groups of people that start in this business. There's people that are more of an investor, or they had a different business. So they were business people, and then they saw this as an opportunity. Then there were people that they worked at a moving company. They were like, well, I could do it better than that guy's doing it. And so they kind of work up the ladder. The folks that work up the ladder, I think, are the ones that get stuck on this stuff the most, because they've never had to do in their life, if this is their first business, they've never had to figure this stuff out.
Sure.
And so they may have a couple trucks and they're just trying to figure out I think a lot of times they're trying to go get their quote for their policy, and they're just blown away in the beginning, when they're a startup, when they're in year 1, year 2, oh my gosh, this cost me a fortune. And everybody's like, whoa, but you kind of got to pay to play and get in the system and show a history, right?
Yeah, there's definitely sticker shock in the early years. And we don't like it. We understand it. The lack of experience. Those tend to be the higher claim companies. But when you've got somebody who's experienced and can put together a very good bio, what they've done in the industry, how long they've been there, again, safety and maintenance are going to be the keys. So when we put together a narrative about this new company, again, if they're willing to buy in to safety, loss prevention, documenting things, having safety meetings, putting together a demonstration for the insurance company that they are a good operator, even though they've got no history, there are ways around. There are ways around the negative. It's not always negative. But it is sticker shock. Yes, you have to pay to play. And once you get past that first 3 to 5 years, it does change the field significantly.
Yeah. What about I'll hit you with another question. What if I'm an owner and again, let's just pretend I don't know a whole lot, right? And it's well, I've got a couple trucks that are used, they got some miles on them, but I own them 100% outright. And then let's say I've got a few that are long-term leases, and then let's say I got a brand new spanking one that I got financed. How's that? How does the way that I've acquired my truck assets, fold into some of the details on the policy? Does it matter? How do you guys look at that stuff?
So, the rating of the policy, the real premium is going to be in the liability. So that doesn't matter how the vehicle is acquired or if it's a finance or a lease. On the physical damage, obviously, that's where the pricing is going to come in. If you own it outright, it's an old unit, you don't deem it to be worthy of having comp and collision on it, you take it off. Obviously, long-term leases and a brand spanking new $150,000 tractor, you're going to want to have all the coverage on it, God forbid something happens. So there are ways, and we will recommend to clients, when to take a vehicle off of comp and collision. If it's only worth $5,000, you really want to have a $2,500 deductible. What are you going to do? Get $2,500 if you total it, and you're going to pay a couple $100 to have the coverage. So we would make recommendations based upon age and value of the vehicle.
Okay. Yeah. Because I think that's a big thing that people look at as well. Moving company A versus moving company B versus C could have totally different fleets, and they run totally different, their systems are all different. So they could all be, correct me if I'm wrong here, but let's say they're all have been in business for 10 years.
Mhm.
And they all maybe have similar loss history, but like what they're doing with systems, are they doing these safety meetings? Like, are they doing this proper staffing and vetting process with MVRs and background checks? Like that stuff really does.
Oh,
move
that
up
it
and
tips the
down.
scales tremendously. It really does. I mean, if you looked at two companies that were identical and one had safety and one didn't, we would say one is lucky and one is safe.
Mm,
The lucky one, it's not in this business, it's not a matter of if you're going to have a big loss, it's when you're going to have the big loss.
right.
And they do happen. I mean, it's just the nature of the the world with truck. I mean, we're in suburbia or we're on a highway. In suburbia, anything could happen. A soccer ball could roll in the street and a kid runs out. What controls are in place, right?
Right.
It's very difficult to measure that.
Yeah.
But anything you can do to mitigate safety and to mitigate claims with safety is going to be critical to demonstrate you deserve the best pricing.
Right.
One of the things we see a lot, obviously, again, if you're new to the moving business, you're not going to really know what coverage kicks in for what. So during the load and unload, when you're going in and out of the residence or in and out of an office building, any damage you do to the residence, any bodily injury you cause, that's auto liability. Even though your truck's parked, it's still auto liability. And those claims tend to creep up. We really recommend that people don't do any gas or water installation. And in a lot of states, it's required to have a plumber do it.
Yeah.
If you do that, you're basically going to exclude yourself from the market. Nobody's going to want to write you because gas leads to booms and water leads to leaks.
And water gets everywhere.
It gets everywhere. You do a kitchen and there's a basement and that water line leaks and you got to flood all the way down to the basement. You're talking 20s, 30s, all the way up to $100,000 in cleanup.
Yeah.
And then another thing is, if you're doing estimates and you're going out to the house to do the estimate and you go there, let's say we're in January now and you go in January for a February move and you're walking around and you see scratches to the hardwood floors, you see nicks in the walls, take pictures, document them now.
Yeah.
So when you get there in February and you finish the move, they can't say, you scratched my floors, you nicked my walls.
Right.
Same goes for if you're walking around the house and you see furniture that's got marks and Mars on it.
Yeah.
Take pictures, document in advance. Have the crew leader take a walkthrough of the house before the whole crew comes in.
There you go.
Same thing. Take pictures, document damage, send it back to the office before you start the move. These are things that it sounds kind of silly, but it could save you tens, 20s. Again,
Definitely say again, it's not if, it's when. And
it's always
exactly.
those are the ones that's the claims that are the most common is the bumps, the scratches, the dings, the breaks, and having that pre-existing damage report, and really taking pictures, documented on a piece of paper, and then having your customer sign acknowledging, yes, I acknowledge that this item have these things have been documented. Customer signs off. Like you're really helping you're making yourself really protected.
And everybody's got a smartphone that has a timestamp on it. So if you start a move at 8 o'clock and the crew leader goes in at 7:50 and takes all these pictures, we didn't start the move till 8. I went in at 7:50. Here's the pictures. A picture is better than a signed document. It's it's a picture. It's live.
Yeah.
Take a video. A lot of the software that's out there for estimating and for moves allows you to attach that right to the file.
Right.
And it's on their pads, it's on their phones. So it's critical to train to use those things. And again, the moving suite software isn't cheap. We know it's expensive, but working out of Excel is only going to work for so long. It's critical that if you're in this business, you're using all of the available tools to make you as smart and as safe as you can.
And it's just these things that it's so much more than, I think the glamorous parts of the business is like the marketing and the sales and buying this or that truck, but like the really good businesses go figure out the insurance part of their business. They figure out the safety, they figure out the staffing, they figure out their numbers, so that way they actually make money every year. You know, there's so many people that they're barely making any money. It blows my mind, and they're doing it. They're just doing it because this is what they've always done. But there's a better way, I think. We'll go one more question here, and then we'll wrap up. But this has been really good. And I recommend anybody who goes and watches this, watch it again. Go back and watch this thing, get a pad and paper, and then write questions down as you go through, and then reach out to these guys and just tell them your situation, and they'll help you out. Let me ask you guys, if I have had a real, let's say a business has a real serious loss, like fatal loss, or something that's just like is the big one. How do I dig myself out of this? Like, what can I do over time? I mean, it's not going to be resolved in weeks and months. It's going to take a long time, but what do I do? Like, if I had that crazy big accident?
Well, like we said, it's not a matter of if, it's when. So we've been doing this a long time,
Mhm.
and every company is going to have what we call a shock loss at some point. You know, whether it be a fatality, a rollover where you lose 3 or 4 shipments. I mean, these are all big catastrophic losses.
Mhm.
You know, they could trend and exceed $1 million. Underwriters understand that. You know, you're buying insurance for the catastrophe.
Right.
It's frequency that's the concern. If we've got a client who has, 10 trucks and has 8 accidents in the year, 8 out of 10, that's a really high frequency percentage.
Yeah.
The average frequency is under 4%. So we want to keep it under 4% in frequency. Severity we can explain away, but frequency, the term in our industry is frequency breeds severity. So if you have a lot of accidents, eventually you're going to have a big one. If you have 1 or 2 claims a year, obviously you're safer than the average customer, safer than the average insured, but we do realize that you're going to have a catastrophe. And that's, again, insurance is for catastrophe. It's not for, hey, I've got a $2,500 deductible and put a $4,000 claim in, so the insurance company pays $1,500. $1,500, $1,500, $3,000, $5,000, $10,000. That's what an underwriter looks at and says, I don't want this account. If you've got a good track record of low frequency and then a boom happens, you're fine. If you've got a frequency and a severity issue, it's a whole different story. And one of the things that we're seeing and we're actually working towards is increasing deductibles. Liability deductibles, they were always $1,000, then they got to $2,500. We're really looking at $5,000 or $10,000 as the new barometer to start with. And I ask you a question, you've got an auto policy at home. What deductible do you carry on your cars? You probably carry $1,000, right?
Yeah.
That's your personal auto policy. Now you've got a business that's doing $5 or $6 million in revenue a year.
Right.
Why do you have the same $1,000 deductible on your trucks that you have on a $150,000 truck that you have on a $40,000 or $50,000 car? Relative to scale, you should be taking more risk in your business than you do personally. We understand, no one wants to take personal risk, but it's a business, and the business can assume risk and it can write risk off. A person can't. So when you go to higher deductibles, obviously you take more risk, the premium comes down. So there are definite ways to offset that increase in cost. And when you have that catastrophe claim, it's definitely looked at differently when you've got skin in the game. And skin in the game means a little bit of deductible, not just the standard 1,000 and low frequency.
Yeah. So I'm here. So you said about 5,000 to 10,000 deductible is really kind of now this bench, the place that maybe just consulting and advising is really the place, what you're recommending.
Yeah. Again, when we look at an account, we look at the losses, we look at the loss history, and we look at what different deductible levels would have done in prior years. What would have been the insurance company's less incurred cost? What would have been the insured's more out-of-pocket cost? And how does it make sense for both parties? It has to be a partnership. The true risk transfer where you just pay a premium and give it to an insurance company and say, hey, handle my claims and give me a good renewal. Those years are over. Everybody's looking at 15, 20, even more % increases on renewals with good years. So look, the trend has been in this industry to have very low premiums. When you look at the moving and storage world versus the truck world, which is very similar, except we park our trucks for 4 hours at a time when we load and unload a home. The trucks are on the road the whole time. Our premiums are fractions of what a truck pays, but our losses when we have them are the same.
Right.
So it's, when you scale it, insurance companies do get hurt. Everybody, even us, the insurance company is always the big bad guy, right? It's always
Right.
the insurance company, but they're in the business to make a profit too. And when you write an account for 100,000 and you have $1 million claim, that's 900,000 of losses they have to recover. How do they recover that? They can't get it from you, so now they increase other people's premiums. So it's, again, it's that pool where the good subsidize the bad.
Right. Yeah. Yeah. And this stuff is good, man. It's important people learn about it. They own a business that's they're doing a little bit of revenue. Whether they're doing a medium-sized amount or a lot, like risk and safety are at the forefront. Especially when, I think on the staffing side, you got a lot of times young staff out there, people in their, mid to late 20s, they still got a lot of life left. And so you want to have a business that takes, care of your people too, takes care of your customers, takes care of your community, do it the right way, do it by the books. And, these guys are really smart, Lou and Matt, thanks for coming on. And I highly recommend, reach out to these guys. How does somebody get in touch with you? What's the best way?
If you wouldn't mind putting our information up on the page, but they can call either of us at any time, or email us. If you want to give our numbers out now, or
well, we'll post it. How about we share it when we share this video? We'll tag you guys as contact info and
that's the best way. Call us, email us. The numbers you're gonna have are our cell phones.
You could even text us.
Yeah, you can text us. So whatever best way to get in touch with us is call or text.
Sweet. And I can tell everybody, these guys are super responsive. We've been talking a lot lately, and I only like to do business with people that are responsive. If you take a week to reply back to my email, unless you're on a honeymoon or you just had a baby, that's basically like, all right, you're gone. So appreciate you guys jumping on, man. Thanks for sharing some gold nuggets. I think some people are really going to benefit from this. And, I think what you're doing with just educating people, we need more of that. You guys are good people. You're good guys. You're doing it for the right reasons. And appreciate your time. We're going to sign off, and we'll jump back in next time we talk to you guys. Okay.
Thanks for the opportunity.
Take care.
Be well.